Welcome back, everyone, to the Investor for Life channel. Today, I want to discuss a topic that's of great interest to many: dividends. Before I get into the topic, if you're new here, please hit that subscribe button, give this video a thumbs up, and hit that bell notification so you never miss any new videos. I want to pose a few questions for you to think about throughout this video. First, are dividends worth it? And what I mean by that is receiving a dividend worth the investment. Many investors will pick stocks solely off the dividend, but is that dividend enough to help you decide whether or not to take the initial investment in the first place? Second, why are dividends good for your investments? Third, what is it about dividends that make them so attractive to so many? I'll explore these reasons behind these questions and provide real-life examples to make it all clear. Let's get into it. So, are dividends worth it? Let's start with the most straightforward advantage of dividends: income generation. As I stated a moment ago, is this income or the dividend enough to persuade you on whether to invest in a stock in the first place? I think you'll be the only one that can answer that. If the income generated each month or quarter fits into your financial plan, then it fits. Income generation through dividends is a fundamental benefit for investors, and it's one of the most appealing aspects of dividend-paying stocks. Let's explore this concept with an example. Consider owning shares of a well-established company like Pepsi, ticker symbol PEP. Pepsi has had a long history of paying dividends consistently. In 2023, so this year, they're expected to pay an annual dividend of $5.06 per share. If you owned 100 shares, that's $506 in your pocket, just from holding on to those 100 shares and doing nothing else. This alone may be attractive to many investors. Now, at the time of this filming, Pepsi was down 6.69% year to date. That's just over $11 per share. The reason I wanted to show this was to demonstrate how dividends can help you in a down position. When you look at the math, those 100 shares of Pepsi are down a total of just over $1,100. Once you add back the yearly dividends, you have now recouped a total percentage of just over 45% of your down position. Now, that's just assuming the 100 shares of Pepsi were not dripped back in. But to recoup 45% of a down position, fantastic, right? Now, let's look at it a different way. Imagine holding 100 shares of Oracle, ticker symbol ORCL. Oracle pays a yearly dividend of $1.60 per share, so that's $160 per year off your 100 shares. Oracle is currently up 35.22% year to date at the time of this filming. That's just under $40 per share that the stock price is up. So now let's look at the math. So originally the stock price would have been $73.32 with your 100 shares, so $7,332. Now valued at $11,319. So you'd be up on the position just off the base price of $39.87. So you add that $160, you now just took your position up another 4%. Doesn't seem like a lot because the position is up, but when you think about the grand scheme of things, the dividends you got simply just by holding it while it went up. And now you've added money on top of the money that you've already made. So dividends can work like for you when it's negative and for you when it's positive, can either help bring you a little bit more out of the hole you kind of were in, or make what looks fantastic even more fantastic. So why are dividends good for your investments? Aside from what we just discussed, dividends can contribute to long-term growth in your portfolio. Take Johnson & Johnson, ticker symbol J&J, a healthcare giant, for example. Over the years, J&J has not only paid dividends consistently, but also seen its stock price appreciate. Imagine owning J&J back in the year 2000. It was valued at about $25 per share. Now it is worth around $150 per share. It has also paid consistent dividends during that time. If you've invested back in the year 2000, your dividends would have grown steadily along with the stock price, contributing to your long-term wealth. Dividends can also help diversify your investment portfolio. Consider owning shares in 3 different dividend-paying companies: Procter & Gamble, Apple, and AT&T. Each comes from a different sector, and by diversifying across sectors, you can spread out your risk. If one sector underperforms, the others may help balance your overall returns. The dividends can help bring those back, similar to what we talked about in the first scenario. So why are dividends so attractive to so many people? I think it has to do with the power of compounding. Could this be why it is so attractive to so many investors? Will this unlock wealth? Let's say you own Microsoft stock. They pay dividends, and you reinvest them and buy more shares. As time goes on, your dividend payments purchase more and more shares, accelerating your wealth growth. This is the magic of compounding. This tactic has allowed investors such as the legendary Warren Buffett to amass his wealth. In time, those dividends can grow to a point that you'll be able to live off of them. Lastly, dividends can provide stability in a turbulent market. Let's go back and use Pepsi for an example. They are down year to date, but continue to pay dividends. If you invested in good, solid companies with a track record of paying dividends, then even during market downturns such as what we're in right now, at least at the time of this filming, they will continue to pay those dividends. And these dividend payments can offer comfort and financial security, helping you stay the course during the market uncertainties. So what do you think? Are dividends worth it? Are dividends enough for you personally to invest in a particular company? Dividends provide income, contribute to long-term growth, enhance portfolio diversification, harness the power of compounding, and offer stability in volatile markets. Remember, dividends can be a valuable addition to your investment strategy, but it's essential to do your research and choose companies wisely. You want to choose company that will continue to pay dividends and have continued to pay dividends over the course of many years. If you have found this video informative, please hit the like button, subscribe to the channel, and follow me on social media for more insightful content. Thanks for joining me today, and happy investing.